As the week begins, there is a notable development unfolding within international financial circles, one that centers on the operational posture of several major banking institutions regarding the Iraqi dinar. These entities appear to be coordinating their activities around a very specific and narrow timeline, suggesting that a period of significant operational action may be imminent. This alignment has generated considerable discussion within certain market observer communities, with the level of analytical chatter reaching a notable pitch. The core of this discussion hinges on the possibility that formal notifications concerning the currency could be disseminated at the very start of the coming business week. Should this occur, the processes for exchange would need to be initiated promptly to meet a critical deadline that coincides with the conclusion of the calendar year. This potential shift moves the conversation from the realm of prolonged speculation into a phase that appears structured and bound by time-sensitive operational requirements. Understanding the mechanics behind this perceived alignment is crucial for a clear perspective on what may transpire. When major international banks, along with domestic clearinghouses, begin to synchronize their internal readiness procedures, it indicates a move from theoretical planning to executable action. This coordination is not undertaken lightly. It involves a series of complex preparatory steps that ensure a smooth rollout should the final authorization be granted. These steps include extensive back-end systems testing, the activation of secure communication links, internal ledger adjustments, specialized staff training, and the preparation of official communications for release. The synchronization of these activities across multiple institutions reduces the risk of technical failures, settlement errors, or communication breakdowns that could complicate any large-scale financial operation. The importance of this interbank coordination cannot be overstated, as it forms the foundational infrastructure for any potential currency-related event. A change involving a national currency on the international stage requires seamless cooperation across numerous jurisdictions, treasury departments, and global settlement systems. The banks that facilitate the movement of money and manage public appointments must operate from the same playbook. When these institutions demonstrate a synchronized state of readiness, it implies that liquidity planning, compliance verification protocols, and security workflows have been meticulously coordinated. This level of preparation involves rigorous test runs, confirmation of messaging pipelines, and the completion of cross-border legal and regulatory checklists. In essence, if alignment is truly in place, the involved banks are not acting on impulse but are poised to execute a carefully planned sequence of actions. This brings us to the immediate timeline that is the subject of much current analysis. There is a recurring focus on the early part of the business week, particularly Monday and Tuesday, as a potential window for the release of official notifications. There are practical operational reasons for this timing. Issuing notifications at the start of the week allows banking institutions full access to their complete staff, executive oversight, and technical support teams for the ensuing days. If notifications were released on a Monday, for instance, banks would have the entire week to begin the administrative processes of scheduling appointments, validating participant documentation, and opening initial slots for public access to exchange procedures. This proposed timeline supports a deliberate, two-phase methodology designed to ensure order and security. The first phase would involve the secure dissemination of notifications and the commencement of appointment scheduling, giving individuals time to prepare. The second phase would involve the physical exchanges at designated branches and redemption centers, likely scheduled to begin after the imminent holiday period. The advantage of this sequenced approach is clear. It mitigates the risk of chaotic overcrowding at physical locations, provides participants with a clear window to organize their required paperwork, and helps banks manage volumes despite potential holiday staffing limitations. This model is consistent with how other large-scale, sensitive financial rollouts have been managed globally. Notifications first, followed by controlled execution. Therefore, it is important to understand what such a notification would represent. A notification is typically a secure, official communication to eligible participants, indicating that they may now proceed to schedule an appointment to exchange currency. In modern operational models, these messages are often accompanied by a secure scheduling link or a dedicated telephone hotline. The notification would explicitly outline the step-by-step documentation requirements, provide instructions for scheduling, and indicate the potential windows for appointments. It is critical to recognize that a notification is not an immediate same-day cash conversion. Rather, it is the formal starting signal for the administrative process, a green light to begin scheduling the actual exchange. For recipients, this moment will undoubtedly carry significant emotional weight, but its functional purpose is to initiate the methodical, procedural phase of the operation. Upon receiving a notification, the most important action is to avoid impulsive moves. The instructions contained within must be read with careful attention to detail. The legitimacy of any provided phone numbers or web links must be verified directly through the official public channels of the bank or institution in question, not solely through the notification itself. Preparation of documentation, exactly as described in the message, becomes the immediate next task. You may encounter references to classification tiers, such as Tier 4 Billions or Internet Group, terms used by some observers to describe the sequence of notification. These tier designations are generally understood to be administrative tools for managing the flow of appointments, prioritizing certain groups for scheduling purposes to control volume and ensure security. Being placed in a later tier typically means being notified toward the latter part of the public rollout schedule, but it does not imply any difference in the legitimacy of one's holdings. If the phased model is accurate, appointment slots would be assigned over multiple days and potentially into the weeks following the initial notification window. This staggered approach underscores why organizing documentation immediately upon notification is paramount. Even if an appointment is scheduled for a later date, having all materials prepared in advance prevents unnecessary delays and reduces personal stress. The procedural focus shifts entirely to preparation and verification once a notification is in hand. The specific paperwork required will be definitively outlined in the official notifications, but common requirements can be anticipated based on standard financial regulations. These typically include government-issued photographic identification, clear proof of ownership for the currency holdings, verified account details for where any proceeds should be electronically sent, and any tax or compliance forms mandated by the holder's local jurisdiction. If a bank requests additional forms or verification steps, it is not automatically an indication of a scam. Such requests should be confirmed through independently obtained official bank contact channels before any sensitive documents are submitted. Photocopies, notarized statements, and bank account verification letters are frequently required in large transactions to prevent fraud and ensure compliance with anti-money laundering regulations. For individuals holding substantial amounts, some banks may institute additional verification steps or offer private appointment settings. Preparing all original documents alongside clean, legible copies in advance is a prudent step. Organizing these materials in a dedicated folder with a checklist allows for quick and accurate presentation at the time of an appointment. This preparation is not just about convenience, it is a fundamental part of engaging securely with a formal financial process. The emphasis must always be on methodical, documented, and verified actions, following the explicit guidance provided by the authorized institutio. NS. Security and fraud prevention will be paramount concerns throughout any publicized rollout. High-profile financial events inevitably attract bad actors who will attempt phone scams, create fake appointment websites, or send phishing emails designed to mimic official communications. The strongest defense against these threats is independent verification. If you receive any message, cross-reference the contact details against the official website of the bank. Call the bank directly using a phone number you have found independently, not one provided in an unsolicited message. Never share one-time passcodes, online banking credentials, or grant remote access to your devices to anyone who contacts you unexpectedly. Legitimate banks will not ask for passwords or direct access to personal accounts as part of a currency exchange procedure. Any communication that pressures for immediate action or creates a sense of panic should be treated with extreme skepticism. The official appointment scheduling process will be managed through secure, authenticated channels. When in doubt, you have the right to ask for proof of identity from a caller and to request a callback number that you can verify through official sources. Maintaining this disciplined approach to communication is essential for protecting your financial interests and personal information during a period that may be fraught with excitement and, unfortunately, opportunistic deception. Considering the physical exchange process itself, based on the operational models frequently discussed, exchanges would likely occur at designated redemption centers and specific bank branches staffed with trained personnel. These centers would almost certainly operate on a strict appointment-only basis to control customer flow, manage security protocols, and ensure thorough regulatory compliance checks. Some centers may offer extended D hours, including weekend slots, in the period immediately following the notification phase to accommodate higher volumes efficiently. The in-person procedure would typically involve ID verification, a review of all documentation, the physical counting and validation of currency notes, ledger updates, and a clear explanation how the converted funds will be dispersed, whether via bank wire transfer, certified check, or another secure method. Banks will provide formal receipts and transaction records for the exchange. It is important to have realistic expectations regarding settlement times. Large value operations often clear through interbank settlement systems before funds become available in external accounts, so immediate cash handouts for substantial sums are uncommon in such structured environments. The entire process is designed to be secure, transparent, and fully documented, adhering to the highest standards of financial integrity and regulatory compliance. This measured approach, while potentially requiring patience, is intended to safeguard all parties involved and ensure the stability of the broader financial operation. Looking beyond the individual experience, the economic and market implications of a revaluation are multifaceted. The immediate headline would be a change in the official exchange rate, but the broader consequences depend heavily on the coordination between markets, regulators, and governments during the rollout. Such an event can affect import and export pricing, influence inflation expectations, and alter how national foreign reserves are managed. For individual holders, the practical change is in the converted value of their holdings when sold through official channels. For the broader global market, a revaluation represents both a technical adjustment and a matter of economic policy, usually accompanied by administrative measures to manage liquidity and prevent speculative disruption. It is vital to remember that the impact of a currency value change is shaped not only by the initial announcement but by the pace of implementation, accompanying central bank policies and the controlled release of liquidity into the banking system. A successful rollout depends on this careful calibration to avoid market dislocations. This complexity underscores why the operational readiness of banks is such a critical signal. It suggests the infrastructure is in place to manage the technical side of the transition in an orderly fashion, should the policy decision be made and executed. At this juncture, a reality check is essential. The information space surrounding this topic is filled with varying degrees of speculation, analysis, and misinformation. While observed operational signals within banking systems can be meaningful indicators of preparedness, they are not synonymous with formal policy decisions. Some reports are grounded in observable bank readiness exercises, while others may stem from wishful thinking or deliberately misleading narratives. Distinguishing between operational signals, such as confirmed back-end testing or staff training bulletins, and formal public policy announcements from central banks or governments is a critical skill. Always prioritize direct communications from recognized banking institutions and official government statements over social media speculation or unverified community reports. If you are following community discussions, treat them as a potential alert system, a reason to verify information through official channels, not as conclusive proof. Approach any claim of instant, effortless windfalls with profound skepticism. Base all financial decisions on documented, verifiable instructions from established banks or official regulatory bodies, in an environment charged with HIG. Expectations. Your most valuable assets are patience, verification, and a commitment to due process. Managing your personal reaction to developing news is equally important. Information of this nature can create an intense sense of urgency that may lead to rushed decisions, such as handing over credentials to unverified parties, seeking out unauthorized exchange avenues, or making financial commitments based on funds not yet in possession. The appropriate response is to practice calm, methodical action. If a notification arrives, pause, read it thoroughly, verify its origins, and then begin preparing your documents systematically. Resist the urge to share personal notification details or appointment information publicly. Avoid any major financial commitments that rely on proceeds you do not yet control. It is entirely reasonable to be hopeful, but that hope should be paired with deliberate, careful steps to protect yourself legally and financially throughout the process. It is prudent to consider a range of possible scenarios to be mentally prepared for different outcomes. In a smooth, best-case scenario, verified notifications arrive, appointment scheduling platforms function without issue, and a phased exchange process unfolds efficiently, with holders receiving confirmations and funds settling through standard banking channels. In a moderate scenario, notifications are issued, but high demand leads to scheduling bottlenecks or additional verification steps, causing delays of days or weeks, requiring sustained patience from participants. In a less favorable scenario, unexpected regulatory hurdles, political objections, or technical miscommunications could delay the process, leading to revised timelines and renewed cycles of speculation. Preparation for any of these outcomes involves the same core actions: keeping documentation organized and ready, maintaining contact with reliable financial or legal advisors, and holding the understanding that even after public notifications, timelines can be subject to change. For those holding significant amounts, engaging with professional advice is not a suggestion but a necessity. Large transactions can trigger specific reporting obligations, and may have meaningful tax implications depending on your jurisdiction. Consulting a qualified tax advisor or attorney before proceeding with a major exchange is a critical step. Meticulous records of all transaction receipts, official communications, and identification materials should be kept. Ensure you understand how proceeds will be reported and what your local tax liabilities might be. If banks offer private or expedited appointment options for large holders, request all terms and conditions in writing and verify any associated fees or requirements. Transparency and documentation are your allies in these situations. Avoid verbal agreements or side arrangements that lack a formal paper trail. The goal is to ensure that every aspect of the transaction is clear, compliant, and secure, protecting your interests throughout the process. The international dimension of such an event is also significant. A change in a national currency's official rate or a systemic reset is not a domestic event alone, it sends ripples through trade agreements, reciprocal banking arrangements, and foreign investment sentiment. Governments and central banks that interact with the issuing country will closely observe the settlement processes, liquidity management, and compliance with international financial standards. A smooth, well-executed implementation can bolster economic confidence and attract measured investment, while a chaotic process could create temporary market disruptions. For individual holders abroad, however, the primary focus remains on securing a documented, lawful exchange through approved and verified channels. For those monitoring the situation closely, knowing which signals carry more weight than rumors is key. Focus on official bank communications, authenticated notices posted to verified institutional websites, and any changes to publicly available schedules or hotline numbers published by these entities. Verify any new contact information through these official channels independently. Pay attention to scheduled press releases or announcements from recognized financial authorities. While technical clues such as public statements confirming settlement system testing can be encouraging, they are not substitutes for a direct public notification. A sudden influx of third-party claims without supporting official documentation should be treated as a prompt for verification, not for immediate action. The political context cannot be ignored, as large financial operations often intersect with political timelines and priorities. Political leadership can influence the timing, public messaging, and fiscal rationale behind major monetary changes, especially when operational timelines appear to align with fiscal year-end deadlines or international treaty obligations. Political will can help expedite administrative approvals, but it can also introduce additional layers of scrutiny and stakeholder coordination. This is why timelines revolving around specific calendar dates often reflect a combination of operational readiness and political strategy. However, political involvement does not guarantee a frictionless process. It simply introduces another set of variables that must align for the operational plan to proceed as intended. A practical checklist for immediate preparation, regardless of the evolving timeline, is advisable. First, organize your government-issued ID and proof of currency ownership, having both originals and clear copies ready. Second, prepare the contact information for your primary bank and any legal or tax advisors you may need to consult. Third, establish a secure method for backing up official communications. Save important emails as PDFs and print physical copies of appointment confirmations when received. Fourth, firmly resolve never to share sensitive passwords, PINs, or remote access codes with unknown contacts. Fifth, ensure you have a verified, accessible method for receiving funds, such as a bank account in your name capable of accepting wire transfers or other official settlement methods. Having these elements in order will significantly streamline your experience should the notification and appointment process begin. The role of banks in managing liquidity and final settlement is a complex behind-the-scenes operation critical to success. In large-scale actions, banks must coordinate with central banks and international settlement platforms like SWIFT to ensure funds move securely and are accurately recorded on all relevant balance sheets. This involves verifying counterparties, ensuring strict compliance with global anti-money laundering rules, and guaranteeing that settlement entries clear through established systems without error. This necessity for flawless execution is why institutions conduct extensive internal testing before any public action. They must be certain their ledgers, communication links, and settlement pathways can handle the anticipated volume. It is also why communications are often staged carefully, to open the public window only when operational risks are deemed manageable. I must emphasize the overarching importance of patience and adherence to process. The human response to potentially life-altering financial news can be overwhelming, but systemic rollouts of this nature are deliberately structured and rarely instantaneous. Even after notifications are released, the subsequent stages of scheduling, verification, and final settlement take time because participating institutions are bound by stringent regulations and must ensure absolute accounting accuracy. Avoid making pivotal financial decisions based on the expectation of immediate liquidity. Instead, use a notification as the trigger to get organized formally and to seek the professional advice necessary for managing a substantial financial transition. Rushing can lead to errors that are costly or difficult to reverse. For those tracking developments on a daily basis, certain milestones hold more significance than others in the immediate future. The primary milestone is the official release of notifications by an authorized institution. Secondary confirmatory milestones include the activation of authenticated appointment scheduling pages or hotlines on official websites, public confirmation of staff readiness at designated centers, and the posting of detailed procedural guides for documentation and settlement. The appearance of these items on verified channels constitutes actionable information. Until such items appear, the focus should remain on preparation rather than reaction to speculation. If you follow community discussion channels, maintaining a separate, clear list of verified items versus unverified claims can help you make decisions based on fact rather than noise. As we conclude this analysis, remember that the coming period is a test of both systemic preparedness and individual discipline. If the discussed timelines materialize, the subsequent steps will involve MEDIC, ULOS paperwork, patient scheduling, and unwavering attention to security. For individuals, the most powerful tools at your disposal are thorough preparation, scrupulous verification of all information, and access to sound professional counsel. Organize your documents now, verify every communication through independent official sources. Resolve to act calmly and deliberately when and if your notification arrives. If any aspect of the process generates uncertainty, consulting a trusted financial or legal advisor before proceeding is the wisest course of action. In a high-stakes, fast-moving environment, a clear plan and calm perspective are invaluable. This communication is strictly informational and is not intended as financial advice. The content provided is designed to help you understand potential operational mechanics, prepare necessary paperwork, and distinguish between legitimate signals and mere speculation. Major financial operations involve complex, cascading consequences and can be subject to last-minute changes due to regulatory, political, or technical factors. Always verify all communications through the official channels of the relevant banking institutions. Consult qualified tax and legal professionals for guidance pertaining to your specific situation. If notifications are released, treat them seriously but verify their authenticity independently. If no official notices appear, refrain from acting on rumors alone. The consistent themes are preparation, verification, and the protection of your financial interests through prudent, informed action.